I'm back from my honeymoon to Costa Rica with my beautiful bride, so let's get back to work. This video is going to highlight some of the biggest things that have happened in the last week or so, and there's been a lot of things that happened while I was gone. And there's going to be a lot of things that are going to continue to happen in the next week or two, so I'm going to give you all the highlights of what happened this past week, what's coming up, all the dates to consider, and a bunch of things that are about to move the stock market in July. This week's postponement of the July 9th US tariff deadline to August 1st, along with pressure to get more deals done by then, was obviously the biggest piece of news, but come on, who didn't see that coming? So first up, let's talk about this big beautiful bill Roth IRA stuff. Recently, a number of YouTubers and bloggers have come out with some information breaking down the bill, but none bigger than Andre Jack. When I heard what he had to say, it definitely piqued my interest, and so I did my own digging. It's always important for you to do your own research, and I'll show you what I found. But first, this is what he said.
Now, this bill also has some major changes to the Roth IRA by 2026. And this is super important. Right now, you know that if you make too much money to contribute to a Roth IRA, there's a loophole. You can just contribute to a traditional IRA and then convert it to a Roth. A lot of people I know do this, and it's totally legal, but not for a lot longer. Because starting in 2026, this bill will get rid of the backdoor Roth IRA strategy completely. That means no more after-tax IRA conversions. If you've been doing that trick every year to build tax-free income in retirement with a backdoor or even a mega backdoor Roth IRA, you might want to start looking at other options right now. And there's two reasons why they're doing this. First, it raises tax revenue. And second, lawmakers say that this loophole mainly benefits wealthy people and wasn't really what Roth IRAs were intended for in the first place.
So after hearing that, obviously that's a huge deal, and that's something that definitely affects me as I do the backdoor Roth IRA. So I went ahead and dug a little further, and here's my findings. The spoiler alert here is that there is absolutely nothing in the big beautiful bill as of right now that actually says that they're going to get rid of this backdoor Roth IRA. But there are some stipulations and some things as to what it might include. And that first one is eliminating the backdoor Roth for high earners. Proposed restrictions may ban Roth conversions of after-tax IRA contributions for individuals earning above a certain income threshold, like $400,000 or above, similar to what was proposed in the original Build Back Better Act in 2021. Number two is the possible elimination of mega backdoor Roths. The mega backdoor Roth done via after-tax 401k contributions and in-plan or in-service Roth conversions may also be limited or banned. Number three is one of the ones that actually could happen, but I'm interested to see how it might happen, but these are new taxes on Roth conversions. Some versions of the proposal have floated additional taxes or waiting periods for converting traditional to Roth IRAs. Potential 5 or 10-year holding requirements or new surtaxes may apply depending on income level. All this being said, this is basically just speculation, and nothing is actually saying, yes, absolutely, we're going to be cutting out the backdoor Roth IRA. Also, the bill still has to fully pass, and even then, again, it doesn't say anything about killing off the backdoor Roth. A day after Andre Jack posted his video, he actually amended the video with this pinned comment. He said that he confused a piece of the bill with the Build Back Better document from 2021. He wrote, "Correction, backdoor Roth IRAs are unaffected. The loophole is not going away." So what should you do now with this information? Basically, just keep doing what you're doing. Nothing's changing yet, but do understand, even if the big beautiful bill doesn't have this in it, maybe some other bill down the road might have it. I believe the Roth IRA is the most powerful tool in investing and actually saving with that tax-free wealth building. So here's some quick Plan B options if backdoor Roths are banned. You can max out your Roth 401k contribution if your employer offers one. Contribute to taxable brokerage accounts using a tax-efficient ETF or index strategy. You could also consider municipal bonds, health savings accounts, or life insurance retirement plans for tax-advantaged growth. Now that was a huge thing that could affect all of us as investors. I also quickly have the SparkNotes version of the top 5 things that I got out of the big beautiful beautiful bill. So let me highlight that real quick for you. One big thing was that it stimulated startup funding and venture capital activity. The housing market in high tax states may get a lift from the SALT relief. EV and clean energy sectors face short-term setbacks. Healthcare providers and low-income households face budgetary pressure. Educational equity debates may intensify as voucher incentives scale. Despite aiming to support working families, the bill's generous benefits for investors and wealthy taxpayers, paired with cuts in social programs, have drawn criticism, even from figures like Elon Musk, who argue it furthers inequality and could harm long-term growth. My thoughts are, let's just wait and see what actually happens. This thing has to pass, and even then there could be some changes or some amendments. Let's see what actually happens before we start freaking out. But it is good for you to assess what's the most important thing for you in your investing strategy and make sure you keep going towards that goal. Okay, let's go over some key dates that you need to know coming up here in July, and then I'll give you the highlight quick version of the biggest news that moved markets over the last 2 weeks or so and what's going to be happening next week. So key dates in July. July 14th through 18th is the US Consumer Price Index, CPI, and bank earnings. July 15th specifically is CPI for June, including headline and core inflation. Early in that week, we have major bank earnings kicking off, including JP Morgan and Bank of America. On July 16th, we have the PPI for June. On July 17th, we have retail sales from June and the Philadelphia Fed Index. The big one is July 30th and July 31st with the FOMC meeting and the second quarter GDP advanced report. On July 30th, the Fed sets the new federal funds rate outlook at 2 p.m. Eastern Time, and the same day that morning, the second quarter US GDP advanced reading. Expect whatever happens July 30th and July 31st, and those types of things that come out of that meeting and what's actually announced to the public to really be a telltale sign to see what's going to happen with the Fed rates, which I don't think they're going to change in July, but a lot of people do think in September we're going to see that first rate cut. So some key market events in the past 2 weeks. Number one, Bitcoin's at an all-time high. Bitcoin topped $118,000 per coin as institutions continued piling into Bitcoin ETFs. On Thursday, Bitcoin ETFs logged their biggest day of inflows of 2025 at $1.18 billion. Ether ETFs recorded their second biggest day of inflows ever at $383.1 million, according to SoSo Value. For the week, Bitcoin's on track for a nearly 10% gain and its best week since April of 25, while Ether's up more than 21%, heading for its best week since May 9th. Number two is all about the tariffs. 35% tariffs on Canadian imports, plus 50% on Brazilian goods, 50% on copper, and 200% on pharmaceuticals, all set for August 1st. President Trump sent letters to 14 trading partners with similar threats. This reignited trade tensions. Markets briefly pulled back from record highs, with the S&P 500 dipping 0.3%, and the Dow losing 0.6% on July 11th. However, many investors expect the threats won't stick, what's dubbed the taco trade. Still, analysts warn that this strategy is becoming riskier. Number three, Fed policy and inflation signals. JP Morgan's Jamie Dimon warned markets are ignoring a rising chance, like 40 to 50%, the Fed may hike rates again, citing inflation from tariffs, fiscal deficits, and demographic shifts. The Fed minutes in June showed ongoing debate on future cuts. Officials expect 2 rate cuts by year end, though tariff-related inflation could delay them. And this has kind of been the story this whole year. We're supposed to have rate cuts coming up, but maybe not. And now they're even talking about possibly increasing the rates, which I don't think is going to happen there either. So again, this is like a wait and see situation. Number 4 is huge in AI, and this is NVIDIA. NVIDIA reached the $4 trillion market cap, rallying the NASDAQ multiple times this past week. Other AI-themed techs also propelled markets even as trade concerns simmered. That tech space is on fire, but be very, very careful. This is the time where a lot of people FOMO in because they don't want to miss it and they think that, okay, everything's good, there's the green light now, But this is the time, statistically, that most people actually lose the most amount of money. When they're buying in at the top, like the tip top, this is for sure the riskiest time to get into those specific investments, so make sure and do your research there. Number 5, asset flows and global rotation. Despite tariff worries, US equities remain up 6% year to date, while international markets like MSCI, EAFE, and emerging markets have outperformed in quarter 2. Investors are rotating into bonds and foreign stocks, with some capital exiting US markets. The VIX Fear Index, VIX, hit a 5-month low on Wednesday, while the bond market equivalent, MOVE, is near its lowest for the year. It's all so interesting this year, honestly. This has been super fun taking my university students through this historical time that we're kind of going through right now, with the market shifting so heavily with these policies and things coming out of the White House, and then what's going on with the Fed. It's just pretty cool to show them that all of this is connected and the market is definitely emotional. People were freaking out thinking that the USA was never gonna recover and that literally this crash could be the biggest crash in our lifetime. And that was literally about 3 months ago. And now we're surpassing all-time highs pretty much everywhere in every part of the market. I do think that we have a couple of dips coming our way, so stay tuned and I will keep you informed. For now, watch either of these 2 videos, keep you going strong in your investing journey, and remember to keep investing simplified.